Hello, my name is Jay Young with Real Property Associates. I'm one of the co-founders. We've been in business since 1991. We're located in Seattle, Washington, and we pride ourselves in having Seattle's best property managers. Today I have with me Andrew Callen with FirstMark Insurance Group, and we're here to talk a little bit about landlord policy versus a homeowner policy. We've had a lot of clients that either at one point or another have lived in their home or apartment or duplex, and they decided they want to rent it out. And so there's certainly, when you do that, there's a lot of changes, but one of them is what do you do with your insurance policy and what kind of changes do you make? So Andrew, can you tell us a little bit about the two different kinds of policies and how they compare?
Sure. So you've got a homeowner's policy when you're living there, you've got your family there, all of your belongings are there, and then you've got a landlord policy where your family's not living there, someone else is living there, and you're getting a rental income, right? So there's a lot of similarities between the two policies, but there's a couple points we'll talk about right now that are different enough that you want to make sure that you make the change in policy. Work with your agent, get rid of the old homeowner's policy, replace it with the landlord policy. Probably the most important part of that is the loss of use coverage. No one thinks about it on your homeowner's policy. That's the one where if you've got a kitchen fire or the house is on fire and you can't live in your home for 6 weeks or 6 months or 12 months, this will pay you money to go live somewhere else until your home is put back together. On a landlord policy, you've got a different risk. You've got people living there and they're paying you rental income each month. Well, if the house burns to the ground, you're not getting that rental income anymore. The lease is void, and so a landlord policy will pay you that rental income until the home is put back into working order.
What about in the instance where a tenant, causes some intentional damage? What does that look like, and is that covered?
It is. If you've got a real stinker of a renter, and on the way out they're spray painting the walls, they're kicking in the drywall, that can be some significant damage. If it's intentional, malicious damage, that's going to be covered under the landlord policy. It could really add up pretty fast.
What about personal property? Are there changes with amounts that are covered between the two?
Sure. On a traditional homeowner's policy, you've got a high amount of coverage. You've got all of your clothes and all of your furniture and TVs and computers and all that stuff. On a landlord policy, it's all the tenant's belongings that are there. But the building owner often has $10,000 or $15,000 worth of tools, appliances, the washer and the dryer, the lawnmower, things of that sort. For not very much money, you can add coverage for that.
Okay. And then finally, what about a cost comparison? How do they, in terms of the rates, how are they treated?
It's generally very similar. It's case-by-case basis, but sometimes it's a little bit lower and sometimes it's a little bit higher. There's all kinds of variables. It's subject to your deductible, obviously. You really want to work with your agent in that transition to make sure you've got that policy just right, because maybe it will go up and you want to make sure that you're getting the price where you want it. But in general, it's about the same price.
Okay. Great. Andrew Callen with FirstMark Insurance Group, and I'm Jay Young with Real Property Associates. Thank you.